So what's going on when it comes to crypto, specifically Bitcoin today?
You know, Tim, it's not good. Bitcoin down for another day, coming back a little bit, but it did break below that $40,000 level per coin earlier today. And that brought losses for the year briefly to 6%. And Bloomberg News crunched the numbers. That is the worst start to a year for Bitcoin since about 2012, really since Bitcoin came into existence. So definitely a rough ride for Bitcoin. This follows losses in tech stocks broadly. It just seems like Bitcoin can't really get off the ground here.
Well, let's get into it with David Towell, the president of ProChain Capital. It's a crypto hedge fund. Also joining us is Eddie Vanderwalt. He covers commodities and crypto for Bloomberg in London. David, I want to start with you. Help us explain, or how can you explain the decline in Bitcoin that we've seen, as Katie mentioned, falling below $40,000 per coin for the first time since September?
Tim, I think it's it's been a continuation of what happened in December. December was a particularly ugly month for cryptocurrencies after an incredible 2021. I think everybody has to admit, and clearly the pronouncements by the Fed in terms of being more hawkish, raising rates, is not good for tech all around. And I think, just to step back for a second, there has been in recent days calls for $100,000 Bitcoin, coming out from luminaries such as, Jeremy Siegel out of Wharton and out of Goldman Sachs. And those are predicated on Bitcoin being the next gold, where you think people would go to in order to go ahead and protect against a weakening dollar. However, on the other hand, Bitcoin and all the other cryptocurrencies are very much technology focused. And so clearly at this point in the month, it seems that the market is siding more with the tech side of the story than the alternative to gold side of the story.
And David, if that's the case, that Bitcoin is siding with that tech story, at least for now, I mean, how low could Bitcoin go? Because again, broke below $40,000. It feels like it can't sustainably stay below that number yet. But where might this sell-off take us to?
I'm sure technicians can give a much better, answer on the basis of historical charts and patterns. I'd say from a fundamental perspective, I'd say 38,000 is probably an important threshold number. If we're able to go ahead and sustain this number and, potentially see some rise after the sell-off in the NASDAQ, let's say, stops as well. If there is a rebound, then I think, we can go ahead and say that the bottom is in. Generally, I would say that this is a pretty good buying level, especially if we go ahead and just retrace the losses. I mean, you're talking about, a 50% plus gain from here.
So pretty good buying level. We'll definitely keep an eye on that $38,000 per coin. Eddie, I want to hear your thoughts on Ether specifically, because it's been interesting watching the dynamic between these two biggest cryptocurrencies. You had Ether well outperform Bitcoin in 2021, but in 2022, it seems that this sell-off has hit Ether to a much greater extent than Bitcoin so far. What do you make of that?
Look, I think the relationship between Bitcoin and the rest of the cryptocurrency space is a very clear one. Bitcoin, very much at the moment, is still the thought leader in terms of price movement. When Bitcoin goes up, the rest of the cryptocurrency space follows, but they tend to do so more. They tend to amplify and echo Bitcoin's moves, right? So when we see Bitcoin go up, they do go up more. They're a high beta play. They like silver to gold. If I can use that analogy, when gold goes up, silver goes up a lot more, but then on the downside, it's exactly the same thing. So I think they are a high beta play on Bitcoin. So we shouldn't be surprised. But I think what's interesting is that over time, we are seeing cryptocurrencies like Ether taking market share away from Bitcoin. Now, that doesn't look like it when we see the drawdowns, but obviously when Bitcoin was launched, it represented 100% of the space. And year by year, as the years go by, Ether and Cardano and all of these others eat a little bit at its market share. And I think this is something that continues because I think there's a lot more interesting things happening just in the DeFi space, and that's something that's really home to something like an Ether.
So Eddie, to build on that, I'm wondering what are the coins that our viewers should keep an eye on for 2022?
Look, I think if this is going to be, I think it depends on your view. If you think that this is going to be a year of drawdowns in cryptocurrencies, which is possible, then I think you've got to look at the relative haven status of Bitcoin in the space. But I think in the long term, I think Ether and Cardano and those are the cryptocurrencies that I really like. The ones that are being used for DeFi, that are being used for NFTs. There's something really interesting and unique happening in that space, and those are the cryptocurrencies that I would be looking for the long term.
David, I want to hear your perspective on that same question. What coins are you watching in 2022? Is Bitcoin kind of, has it been done? Are there more exciting things happening in some of these other coins, these other blockchains?
I think Bitcoin deserves to be a part of a portfolio of cryptocurrency, certainly for, as far as my eyes can see. It is a unique cryptocurrency. It's not something that has, on a number of different criteria and levels, there is no corollary to it. To go off of Eddie's point regarding Ether taking away market share from Bitcoin, there's also an argument or a discourse going on in the DeFi space where the likes of Solana or Avalanche, that are also incredibly equipped to go ahead and process DeFi, are taking market share away from Ether. So in our mind, in ProChain's mind, Bitcoin is a bucket in and of itself. The DeFi bucket actually is much more dynamic, I'd say, than Ether taking away from Bitcoin. I think there is a lot of jockeying going on between Ether, Avalanche, Solana, Cardano, and so forth. And then you've got, the others, the gaming tokens, and then the NFTs. In terms of the gaming tokens, there are a couple of large ones like Axie Infinity that has done incredibly well, but look for, a big comeback or pullback, I should say, on Axie, even for a little bit more time before going ahead and legging in. And then with respect to NFTs, we don't invest directly in NFTs, but we're involved on the private side in a little bit of NFT marketplaces. And then don't forget, guys, it's important to go ahead and continue to look at the public equity markets as well. Visa, MasterCard, PayPal, Square, Coinbase, those are all incredibly involved crypto names. Granted, it's not, a majority of their business, but more and more it's becoming an important part of their business. And ProChain looks and trades there as well. And I think investors, it would behoove them to go ahead and have a focus there too.
Yeah, that's a great point that actually there is a lot of different avenues to get exposure to crypto and all the innovation happening there just in the public equity markets. But David, I want to build on a point you made earlier that with the Fed, potentially pulling back stimulus, potentially quicker than a lot of people expected. Obviously, that's hitting tech shares, that's hitting Bitcoin right now. But taking it away from just the price of Bitcoin, I'm curious about what you think that means for investment in the space, because obviously venture capital poured a ton of money into crypto broadly in 2021. But if we do see a sustained pullback, the Fed removing support, do you think some of that investment is just bound to cool off?
No. I think the dry powder that's available in this sector is enormous. The focus that exists in this sector is gigantic. And I frankly think that the people that are investing on a private basis are not even looking to the public sector, to the liquid traded, either cryptocurrencies or stocks as comps. They are looking at this as VC level funding. They're going to invest in an incredibly early stage. There is an incredibly long horizon for when they're going to go ahead and cash out. Granted, the markets may go gaga in 6 months from now, and it may be an easy way and a quick way to go ahead and turn an investment. But I think most of these investments are for a much longer period of time. And they believe, the VC funders that are investing, particularly in cryptocurrencies that are being created, that they are going to go ahead and dominate certainly 2, 5, 10 years out.
Right. Hey, Eddie, I want to end with you and just talk a little bit about institutional interest in crypto. With the decline that we've seen of late, I'm wondering if you anticipate any sort of institutional interest waning, because look, it's not getting more expensive. It's not going up in value right now. Do you see an effect of that?
Look, that's a really interesting question. I think the Bitcoin's finding, and cryptocurrencies generally are finding that institutional money is a double-edged sword, right? Institutional money obviously helps push prices higher when it's flowing in, but at the same time, that raises that correlation with things like the Nasdaq and makes Bitcoin more exposed to the credit cycles and to just to the broader animal spirits that move markets. So yes, I don't think that the institutional money will go away, no, but I do think that Bitcoin becomes more and more correlated as a result of the institutional money that we're seeing flowing in, or have seen flowing in. And yes, that will mean that money will flow out from time to time too. But I think that's just part and parcel of being part of the financial furniture of the world.
Yeah, Bitcoin is a macro asset. That seems to be the theme that's emerged in the past few months. But guys, we got to leave it there. Great to get some time with you on this Monday.